So I'll bet you every single person in this room shares this experience of when they first got blockchain and they first had it explained in a way that finally sunk in and had that aha moment. Wait a minute. Well, that could mean anything. So we've got a wonderful panel come up here to talk about kind of the future of what blockchain and what a rollout of these technologies really could look like, with a vision of some really brilliant ideas led by Kahina Van Dyke. So Kahina, come on up.
Bring this up a little bit, people. Okay. I just yelled into the microphone. I'm sorry. So good afternoon, everyone. Thank you for being with us. I am really, really happy to have these three people share the stage with me. I'm going to let them introduce themselves. The one thing I will say about each of them, I have known some of them for over 20 years, and we were part of internet. Like, we were having conversations about the internet. So I think it's really interesting to be back here. It comes full circle. But I would love for each of you to introduce yourselves just briefly, and then we'll get into it.
Okay. Hi, everybody. I'm Amy Radin. I'm an author and right now an advisor to large enterprises and startups. I guess I could call myself a little bit of a marriage broker, helping bring them together and work together. Kahina and I have known each other for a long time, probably back to about 2001 or so, when I was leading the digital transformation of Citi's U.S. credit card business, which was about a $5 billion P&L with about 100 million customers at its peak. And about 4.5 years ago, after holding other roles at big financial services companies, American Express, E-Trade, AXA, I decided to cross over to the other side and use my passion and skills that are really all about how do you execute innovation, particularly in these complex environments, to make it happen. My book was just released a few weeks ago, and thank you, all of you who picked up a copy of the Changemakers Playbook. I hope you enjoy it. That's me. Thanks, Amy.
Okay, hi everyone. My name is Tokunboh Ishmael. I'm the co-founder and managing director of Alethea Capital, and also the chairperson of the African Venture Capital Private Equity Association. So I'm a fund manager based in Nigeria. I manage a couple of impact investment funds. Chiefly, those that are relevant for today are some financial inclusion funds that I run, where we invest in financial intermediaries to broaden access to finance for the unbanked and underbanked. And I can speak more about that as we go along.
Hi.
Wow.
You ready for this? I'm Ben Braybn. I'm head of Level 39 in London. It's a hub of around about 200 fintech and cybersecurity companies right in the heart of the Canary Wharf financial district. You have just heard from TransferGo, who are one of our members, and of course Ripple are too. So we're trying to do three things for companies. We're trying to create conditions, first of all, in which a company can grow from minimum viable product right through to enterprise size, so just solving infrastructure. The second thing we're trying to do is create conditions in which talent performs as well as possible. So even small teams have access to the very best possible support. And thirdly, we're trying to make all of this addressable by the wider population, so politicians, regulators, investors, and of course the media. So we provide a kind of simplifying and clarifying role for the huge diversity of innovation that goes on in our community of about 1,250 people from a little over 50 different countries. So far, that's level 39. What we're keen to do, of course, is make sure that every company that gets involved has a better chance of success. We reduce friction, we increase access, and we seek to support high performance.
So it's level 39. I was living in London when level 39 launched in Canary Wharf, and it's really amazing to see the fintech community that has developed around it. So I'm a big fan, and you are, I think, the largest fintech incubator in Europe, and definitely one of the most influential globally. So congratulations to your own startup story of the last years developing level 39. I want to start with international trends, because a lot of what we talk about is how we are reducing friction and how we're moving money cross-border. I would love to start with Ben and Tokes. Maybe I'll start with Tokes, about what you are seeing in financial services, what you're seeing in fintech. You're right at the cutting edge. You are investing in the companies who are coming with a great idea or a problem that they want to solve in the world. And what are you seeing right now from Lagos? And by the way, she did fly in from Lagos just to be here with us today, so thank you.
You're welcome. So when we started our financial inclusion fund, the research at the time showed that about 70% of the Nigerian population where we were focused at the time was excluded from banking services. And in a country of 180 million people, of which about 80% of those are in the adult group, 70% unbanked is quite significant. And being unbanked, when you're in the West, it's difficult to envisage not being able to just save your money, no matter the amount, having to put it under your mattress, not being able to be in a place where you can actually go into an institution and cash in or cash out your money. So back then, the retail banks and commercial banks were very focused on the 1%, we used to say, of the population, those that had money and the corporates. And they got very complacent in the delivery of their services. And what we've seen, we invested in our first fintech about 10 years ago. What we've seen is these challenger fintechs come along and begin to provide access in communities, begin to make it possible for people to send payments from one family member to another without having to carry bags of cash. And we're very much a cash economy. And I remember about 10 years ago when I said to someone that, I can now sit, I said this with excitement, I can sit in my living room and pay my bill. The person thought, what's the big deal about that? But in economies in Africa where really it's not just that the banks don't exist in communities, people just don't have that ability. So the fintechs have come along, and what they've done a couple of things. First of all, they've broadened the access, but also they've made the commercial banks turn their business models around and begin to say, we need to look at retail customers. So, in a large economy, when most of the banks are saying, we need to turn around from just looking at corporates, it's a major shift. And what they've also been able to do is then get those big commercial banks to begin to look at how technology can play a larger role. So despite having the deeper pockets, they were not doing this, but the fintechs came along and sort of stoked the fire. And so we've been investing in quite a few of those, and latest research in our markets now is showing that the number of unbanked have gone from something like 70% to more like 45%. So
Significant.
It's quite a significant
move.
change.
What is your favorite success story about a fintech disruptor or challenger that you invested in and you saw them actually scale up and grow?
Yeah, so I mean, our first investment, it's like, I feel like it's my baby. We were the first institutional investor into a company called Paga. And when we invested, Paga had 2,000 clients, if that, and was operating out of one building in Lagos, and was more fixated on how they could raise tens of millions of dollars to market to still the 1%, the same target group as the banks. And when they came to me, I said, well, this is great technology. And because I'd worked with Kahina on wallets about 20 plus years ago, I recognized that wallets had to play a role in helping to drive this financial inclusion. Because we started off investing in microfinance, brick and mortar. So fast forward 10 years later, and I was just having this discussion with Amy, one of the largest banks in Nigeria has roughly about 10 to 12 million customers, they say. The fintech that we invested in just 10 years ago, and by the way, this largest bank is about 100 years old. This fintech now has nearly as many customers at over 9 million. So for me, that's just an amazing challenger story, and not just targeting the same customers, but creating new markets with new products.
Ben, I would ask you the same question, because you really do sit in a really unique purview because you work with the regulators in the UK and across Europe. You work with the big banks and you work with the disruptors. And as you're seeing all of these challengers come up, what makes London and the fintech scene that you're seeing so vibrant? And what are you seeing from a challenger perspective, and how is that impacting the more established players?
I think the most distinctive defining characteristic of our community is that we're surrounded by so many massive clients. So London's been a global financial center for about 800 years.
I told him yesterday, don't say that, because the Swiss would argue with him that that's not true. No, I agree, 800 years,
Well,
yes.
Switzerland isn't far away. So if you come to London, you've got the whole of Europe at your fingertips.
True.
So no, I have no argument with the Swiss at all. And of course, I think it is precisely because right across Europe you have a diversity but a long history of financial services that there's plenty of opportunities for companies to engage in different ways. So what that means is that the 200 companies, certainly that are in level 39, are actually running essentially 200 parallel experiments. There is no one emergent standard which everyone is converging on. And you use the word challenger. Of course, it's important to consider that a high proportion of what happens in a community like ours is B2B. So collaboration or co-opetition is probably a more appropriate word in many cases. Of course, many of the people working in challenging or disrupting organizations actually have deep roots in incumbent organizations. So I'd suggest the picture is more nuanced. You come to an environment like London where perhaps, and sometimes people summarize it by saying it's got the access to financial services that you find in New York. It's got the tech you might find here. It's got creative industries that you might find in Los Angeles, and it's got political access like you might find in Washington, D.C. So if you take those four great cities and roll them into one, that's London. Of course, what that means when it comes to challenge is that organizations are simultaneously trying to reach into the distribution networks and the talent supply of the big incumbent institutions while still bringing something fresh and new.
Yeah. Question for you about one of your current clients that's gotten a lot of press lately, which is Revolut, and they just did a big round of funding, and everybody heard about them. And here they're being positioned as, the disruptor. I know you've had many esteemed companies go through Level 39, TransferWise, a whole bunch of companies that I've met as they were coming up. You are very clear that those aren't disruptors. They are, co-op. Do you believe that somebody like Revolut is actually going to make a run at Barclays as far as from a customer size to what Tok said in Africa? Is there that type of opportunity for some of those companies to get just as big as the traditional players, do you think?
Oh, I think there's every bit of opportunity for huge scale, and Revolut's a fantastic example of a company that's certainly set itself as a rival. It's presenting fresh ideas, new ways of doing things, very, very customer-centered. And if you look at the rate at which they're deploying technology, it's eye-watering. Yeah. And I believe that's in part because they are part of this highly competitive cohort of organizations. But critically, that cohort includes incumbents and external non-financial services competitors as well. So sometimes people compare this to a peloton in a cycle race. Everyone goes faster if they're actually competing with each other.
Yeah, okay. I want to switch gears. Amy, who I have known for a long time, she was a very tough boss, let me tell you, back in the days. Like, you did not walk into Amy's office if you were not very prepared. So, and she sent me out to Silicon Valley to work on wallets, where I met Tok. So everything comes full circle. But I wanted to talk to you because you have run innovation at some of the largest and most iconic brands in the world. You mentioned Citibank, E-Trade, AXA, in the C-suite, and really being the innovator and the disruptor in those places. I'd love to hear your perspective on innovating and disrupting from within, and some of the challenges and some of the wins that you see when big companies get it right.
Yeah. So think about it. We just passed the 10-year anniversary of the collapse of Lehman Brothers. And I was in the very unenviable position of being the chief innovation officer at Citi at the start of the financial crisis. And I was laid off from that position. You can imagine that was a day when the word innovation was associated with the toxic assets being created out of the corporate bank, mortgage backed. securities and CDOs and all the things that we never quite knew what those acronyms stood for, but we started to learn really quickly. And I think the last decade has been a really interesting and challenging time for the big financial services institutions. And clearly my perspective is very much US and very much consumer, but I think some of these comments are probably generalizable, that I think for about the first 5 years after the crisis, there was almost like the big institutions were so focused on compliance, on expense reduction, on managing their relationships with the regulators, that they really, to a large extent, took their eye off the innovation ball. I mean, I think, some of the statistics I can remember, 30% increase in spending on compliance. Citi, which I know well, when I left Citi, there were 375,000 employees. I think now there's probably a little over 200,000. So you can see like the just vast reduction in the workforce, and with that, a tremendous outflow of talent and a real loss of institutional memory. And so, it took about 5 years, I think, for most of them, and I think some still are fighting their way out of the dark, right? And I won't name names, but we see them in the headlines all the time. And so it was almost like a lost 5 years. And so in the last few years, you've seen a lot more attention on the key trends that traditional players really see affecting their business model. So mobility, right? The real movement into central roles in the workforce and the economy of the millennial generation, right, with a whole different set of attitudes, and who are owning, in general, student loan debt in the United States that is larger than credit card debt, who may not aspire to own a house in the suburbs that, my husband and I never thought twice about. Something's like, who the hell is going to buy these homes? Millennials aren't. And so you see these incredible trends, technological, demographic, attitudinal. Gene Sperling talked about, just the gutting of the middle class, tremendous wealth polarization in the United States, and all of these trends, cybersecurity, cyber threats. Any of these trends would be tremendous challenges for these institutions, and now they're being forced to confront them all at once at a time when they really have to attract a different kind of talent and also do things differently. So I think there are a lot of great ideas, and I think you see many institutions doing many, many, many interesting things, and certainly investing a lot of resources in innovation around robo-advising, around blockchain, around mobile, around omni-channel experiences, around the use of artificial intelligence. So there's a lot happening. But I think they still need a lot of help and are still trying to figure out how do we connect insights about what customers really need to the drivers of our business model, and what is the business model going to evolve to. Because even for fintechs, many of them, the business models are the same as traditional institutions. They just have a new coat of paint on them. They're lending money and they're collecting deposits. It's amazing how not differentiated the business model is. And so I think there's still a lot of room for growth. And I think startups, companies like Ripple and the many other interesting innovators in the startup space can bring a lot. I'll just say that, big companies don't own the market on bureaucracy, just like startups don't own the market on innovation. So I wouldn't write off at all the potential for the established players to do some really interesting things.
Well, you talk about investing money, the established players, and we see sometimes we call them, science experiments. And how do we move from science experiments in a big company to actually almost innovating yourself and disrupting yourself? And I'm going to bring you back to a time when Citibank decided that they were going to take a run at PayPal with a thing called See to It, if you remember. Right, way back when. And I think this is interesting because we sometimes talk about the lore of, PayPal 20 years ago was, trying to find funding or an owner and, knocked on MasterCard door, and MasterCard said, no, thank you, as the story goes, and knocked on Citibank, and Citibank goes, we'll build it ourselves. We have 100 million customers. We can do this. We have their accounts. We can do their email. We have their emails. We don't need someone else. My question to you is, why do you think some of those big initiatives, because that was a big investment. Some people say that there's like $100 million invested in that. why is it so hard for a big company to innovate from within, even though they have the customer base and they have all of these advantages? What do you think that barrier is to being the next PayPal?
You know, I don't think there's one barrier, and I think it varies. It can really vary by the institution. But it was interesting. When I did the research for my book, I interviewed probably about 50 people who I all saw as change makers, people who somehow have, you know, managed to do it. But a combination, not just financial services, probably covered about a dozen sectors, and founders, investors, and corporate executives who had lessons to share. I think what stops people, first of all, in general, I was like the worst science student on earth, but one thing I do remember was Newton's first law of physics, which is the law of inertia. And I think, you know, we have a, you know, human nature is things will continue on their present course unless they're disturbed by something of much greater force. And unfortunately, that usually means something bad has to happen. So I think you need these people in the organization who are willing to have enough passion and a sense of purpose and insight about a market need, who are willing to stand up, but then who also are going to have the sponsorship from not just the CEO, but from the entire C-suite, who will create accountability and also help reinvent how things get done. And I think that's what stops a lot of people. I used to joke that there were, you know, people in the different organizations I worked in who were paid to protect the company from people like me. And a lot of what I spent my time on was trying to get great people like Kahina into my organization, and then work to change policies or do end runs around rules so that we could conduct small-scale experiments and sort of keep people calm and keep them educated about what was going on so that they understood what we were trying to do and were willing to support it. That is tremendously time-consuming. And I think that's where a lot of the big institutions, this reinvention of the how almost becomes more important than having a brilliant insight about a huge unmet market need and a great solution. It's how are you going to drive it through an organization that is engineered for predictability when you're doing something that is highly unpredictable.
Great point. I love that. Engineered predictability when you are the reason that it's going to be unpredictable. Ben, I want to switch to regulation. It's a big topic. We had a panel earlier today on it. Europe, I guess PSD2 is officially a few months old now. How do you see regulation enabling or stifling innovation in the UK and across Europe, if you could?
Thank you. Well, I think quite often I hear the Financial Conduct Authority, which is the main regulator in the UK, described as the superhero of fintech, which I think kind of belies the fact that both incumbents and challengers, startups and established firms, I think look to the role of the Financial Conduct Authority in the UK as extremely constructive and supportive. The organisation has a brief to support competition and takes that very seriously, while of course also seeking to protect the stability and security of the financial system. And as a result, I think a trend emerging across Europe is an appetite to become, in the absence of being a military superpower or indeed as Europe searches for new roles, one of the things which I think is often mentioned is being a regulatory superpower, a general exporter of standards around the world. And that's something which I think has caught the imagination of politicians right across the continent. And I think that that's most obviously reflected in the commitment they have, the sort of the willingness with which they get involved with all aspects of fintech. And indeed, at the largest gathering of government leaders in the UK in recent history, earlier this year, the Chancellor of the Exchequer mentioned only one element of the economy, and that was fintech.
Interesting. So regulatory superhero and superpower, I have not heard that before, so I'm going to take that with me. Do you believe that now there is actually competition within jurisdictions to be more fintech friendly and to attract that fintech talent in Europe?
Undoubtedly, and I think clearly at the moment as Britain is redefining its relationship with the European Union, regulatory competition forms a part of the battleground, I suppose you could say. But again, just as there are 200 organizations in level 39 taking different routes I don't think that it's going to be winner-takes-all outcome. And of course, for organizations like Ripple that have to coordinate, engage with many different regulators, Europe, I think, is a good place in which to do so because the appetite is very much there. Yes, it's hard to coordinate, but the willingness is certainly in the public sector.
Tokes, you are looking at this in a lot of the high growth markets, and I know that the European regulators have been very forward-leaning about clarity and certainty and encouraging fintech. What are you seeing in Africa in those markets?
Well, certainly in Nigeria, the CBN, the regulator, actually has been very forward-thinking with respect to fintechs, mobile money, and really has played a role in helping to set regulations for other countries in the region. So very much at the forefront. I think it's important to point out, though, that having the same regulator for the commercial banks and the fintechs is a good thing in that being able to bring both parties together and think about win-win solutions. So I definitely agree that it's got to be competition and it's not just going to be about challenging. And what we're seeing is the CBN also trying to get the commercial banks to be able to leverage the infrastructure that some of the fintechs have built so that they can also spread their tentacles and therefore drive financial inclusion even more, which is the bigger objective for all of us. But it's also important to realize that just because we say fintech doesn't mean that there isn't a significant offline aspect to what the fintechs are doing, especially in countries like Nigeria, where what we're looking for is for communities to have access to finance, to be able to cash in and cash out. And so correspondent banking agents, the regulator having the flexibility to empower those agents and the fintechs to have those agent networks to be able to deliver financial services in rural areas.
Are you talking about the bridge between cash and digital in these
Absolutely,
markets?
because at the end of the day, we are very much a cash economy, and cash needs to get into those economies, into those communities somehow. And that's the fintech that's getting that cash into those communities by having those agents, and I'm talking about mom and pop shops, acting as branches for the banks. And I know we'll come on to this, but that's a big area where I'm seeing blockchain empower those mom and pop shops to be able to have those records that have integrity so that they can check the balances and make sure that there's the right money there and make sure that you don't have duplicate customers trying to overlend or overborrow. So we talk about fintech, but the regulator has been very good in making sure that that offline aspect, which is still needed in countries like ours, where people still need to hold their physical cash, they're able to do that because the fintech is providing the rails into those communities.
Let's go right in, because we were going to talk about blockchain next, and you just gave a use case, and I'd like to just kind of go a little bit deeper into that, is as you're looking at blockchain technology, how do you see that in the context of solving those problems on the ground in those communities?
Yeah, and I'm glad you said solving problems, because for us, I mean, there are all these buzzwords, distributed ledger technology and the likes. For us, it is not just a nice to have, but really what can the technology do to solve the problems of people having access. And primarily we talk about access to financial services, but we're also talking about essential services where technology plays a huge role in distribution of healthcare services or education. So for us, it very much is leveraging these technologies to solve problems. And there are two areas where we tend to focus and try and see how that technology can play out. One is in identity, and the other is in payments, which we've been speaking about. And in these, where we are in the Western world, when you hear that, maybe half the population doesn't have identity, you're like, what do you mean? I mean, like in America, you can't move without having a social security number. I mean, that's not pervasive in our market. So what you're enabling is the creation of digital identities for people who've never had identities. And with those digital identities, the ability to participate in the economies because they then have the access, because they then can have a wallet, because they then can open up and cash in, cash out, because they can then go to a hospital and be able to have that invincible record via blockchain. So that's a key area for us. And of course, I've mentioned on payments. And sort of one area that is particularly near and dear to my heart in payments is around cross-border payments, which we've been speaking about. And to really drive it home, if you have an SME, I mean, in Africa we talk about intra-regional trade, which is not as high as it should be across the various countries. Everyone's exporting to the West and the likes. But you have these SMEs who are really the engine of growth in our economies, who are also trying to sell their goods and services, and not just locally, but across borders. And in the past, there's been the friction of them having to convert their money into dollars and then send dollars to another SME in another country who then converts it. I mean, these guys have no business knowing anything about dollars. So the ability to use distributed ledger technology to be able to make those payments from Naira to the Kenyan shilling is huge. And suddenly you're enabling these SMEs to form these webs that are not necessarily dependent on all the politics that goes on with intra-regional trade and all the chit-chat that goes on with that with no action. So for me, it's a big deal to be able to create these webs for these SMEs, which are the engines of
And that's about opening up pools of new customers and prosperity
Absolutely.
for them in that region.
Absolutely.
Amy, I'd love to hear how you're thinking about when you, again, your experience with the big traditional players here, and are we going to see adoption of blockchain across, trading platforms, across consumer banking? What do you think is going to happen, and how quickly do you think it's going to happen for these companies to embrace a new platform?
Well, I don't claim to have the better crystal ball, but what gives me cause for optimism is really and this is really, based more on instinct. I'm a very intuitive person, that I just feel now, I think back to 2000 when I arrived at Citi, and I went around, and the first thing I did was meet each of my colleagues, and there were 12 of them, and a third of them were really happy that there was an executive being put in charge of digital initiatives. A third of them were unsure, but they were open to the possibility. And a third of them were like, well, why do we need you? It was right after the NASDAQ bust. John Reed had left the company, so there was no tech champion there. And I'm like, okay. And I sort of feel like we're at that moment where there is kind of a growing quorum of people who see the possibility and potential, and there is so much experimentation happening by really smart people against really legitimate use cases that you see have that great combination of solving the needs of large populations with potential to also drive a sustainable business model. That you just see enough of that there will be breakthroughs.
There will be breakthroughs.
And so it's an exciting time to be part of that. But there will also continue to be it's going to be messy, because clearly the regulatory environment has a lot of work to do. And one of the things that I'm really taking away from this conference is this notion of needing to shift from thinking about entities to thinking about activities. And I think that's a big, big issue that not just regulators, but I think also people designing user experience have to think about. That if you're, this is really a global platform. So I'm very optimistic, and think we're going to see, less. As an early stage investor, I'm like, wow, I should have some more investments in this, because there's going to be a lot of value created.
Yeah, I'm going to tell a story just to highlight when Amy arrived and at Citibank, and a lot of people, she's being kind when she says only a third didn't think they needed an internet or a digital team. She's being very kind. And one of our first projects was, can we collect the email address And people were like, nobody has email addresses. Email will never work. People aren't going to use email for communication. And Amy was really pushing us about, like, we have to figure this out. And the database guys were like, we have no field that can have symbol signs. And no way are we going to do this. And this is not prioritized. And we need to run another credit line Belcon. And you guys don't make any revenue. And I remember Amy just being like, screw it. We're going to collect it. And we're going to, like, put it in Excel spreadsheets until they understand that this is something customers want. So there is, she's being very diplomatic, but like there is this kind of like, screw it, you've got to believe and you've got to make things happen. And as we got more and more email addresses, like, oh, maybe people do have email addresses and maybe they will let us send like statement alerts to them. And I think that that's part of this process.
I think having been raised as the middle of 5 children, who only 6 years apart from top to bottom, you learn tenacity. I think that's, forget my MBA. I think that's been a big driver of my tenacity.
Love to get a prediction. I put Amy on the spot. I'm now going to put Ben on the spot about where you think blockchain and the acceleration of adoption, because Europe and the UK are in a really different place from a regulatory standpoint, from an investment standpoint. What's your prediction? Where are we in 5 years? We're being videotaped, so I will replay the videotape in 5 years when Swell has, I just love to hear where you think this is all going.
Well, like Amy, I'm an optimist. And like Amy, I studied philosophy and literature. So while Newton's first law may be a good guide under certain circumstances, I think it's worth taking a long philosophical view. So the optimism I have is tempered by this. I think that we've enjoyed a very benign environment for fintech innovation over the last 10 years. And that's partly because of the challenge that it's presented to incumbent finance. But I think that both in the UK and perhaps here as well, the backlash which has begun to respond to tech is something which we need to consider, even with smaller and earlier stage innovation as well. So my optimism about what we can achieve over the next 5 years comes with a recommendation, which is that we must all get better at making the case for this elite sport that we all enjoy and see so much value in. We must be better at making the case for that to people who don't currently have an inside track or an insight or a technological understanding of what it is we're doing, or even a very clear sense of what the benefits to them might be. We've got to get better at making the case for our broad social license to operate. If we do, I think the fantastic utopian visions that we ourselves enjoy is something which we can expect to share much more widely. If we don't, we may find our freedoms significantly curtailed in a populist environment.
I think it's a really, especially following up what we heard yesterday with President Clinton about as we are building this future, to ensure that we are building a future that drives prosperity and more access for more people. And so thank you for bringing that humanity back into the tech conversation and the platform conversation. I'm going to leave it with Tokes as the future, because you are in one of the most populous, high-growth regions of the world. You are seeing the future emerge around you, in many ways leapfrogging the traditionals. So tell us, 5 years from now, maybe to 7 years from now, where are we with blockchain in Africa and financial services?
I'm also an optimist. Very quickly, when I was about 18, I was going to study artificial intelligence and do a master's in that. It's a long time ago. It is like a few decades ago now. And I didn't, because I thought distributed technologies was going to be the future. So instead of studying AI, I studied distributed computing, which is very much what is in distributed ledger technology today. That was nearly 30 years ago, and I think it's finally time for this to have a role in our everyday lives. And what gives me that optimism is that we have become better at explaining the technology. Back then, we used to talk about parallel architectures and supercomputers and whatnots, and people would look at you with a blank face. But now we're talking about this in simple language and showing the use cases. We were not showing it then. Back then, we were using it to talk about how you could have what we called worms running around and like breaking up programs and computing sort of large
She's
NASA
getting really
type.
geeky now. I like
Yeah,
this is the geeky side of Tokes. I love it.
But now we're talking about use cases. So that's why I'm very much an optimist and believe that in 5 years' time, if we are on this stage, it won't actually even be a thing, because it's going to be part of everything we do. And like I've said before, for us in Africa, it's not a nice to have. It really is that, okay, this is stuff that can bring more people into the economy. I mean, the African continent is seen as the last billion. And I think the last billion is going to leapfrog, and we are going to show the world how to really use these technologies.
Wonderful. Thank you. So it's a great way. I should have called it the Optimistic Futurist panel, because it's a great way to end. I think we have time for maybe 1 or 2 questions, if there are. I know it's late in the day. If anybody has questions. I'm squinting. Somebody over there has their hand up.
Hi there. So you referred on a number of occasions to differences across the Atlantic between the United States and Europe. I think one of those is the way domestic payment rails are treated, and access to those domestic payment rails to non-banks and fintechs. In both Nigeria and the UK, the regulators are quite progressive, giving, say, e-money and mobile money companies access to settlement accounts with central banks, or access to NIBs. Here in this country, the approach is very conservative, and I think that the assumption is that the free market is going to take care of itself. So in your opinion, how do you think that that sort of access is essential to the growth of the industry, or is it something nice to have but more incidental?
Ben, maybe the open APIs and what PSD2 has allowed now access to some of these fintech. Would you cover that?
Well, I think it's good to have both sets of conditions, because the tougher challenges that some organizations may face here may stimulate alternative approaches altogether. So while clearly a supportive and adaptable regulatory environment is clearly favorable, I wouldn't altogether say having tough conditions, it deprives us of overall a greater range of innovation.
Yeah, and I would just add to that those conditions do bring discipline to the fintechs and focus the mind on what's important. And also, the fintechs recognize that they can't do this alone, and that if they're going to really have scale, that collaboration is important, which is why I do think it's important that the regulator has got both in the room and getting them to talk to each other.
Thank you. I think we're out of time. I know we're out of time because there's a clock going, you're out of time. So I would like to just say to my guests here from London, Lagos, and New York, thank you for joining us and sharing us your thoughts.
Thank you.
Thank you.